Most Indians take a home loan only once in their life, and that one decision decides whether you save a lot or lose a lot of money. Choose the wrong bank and you lose lakhs. You allow tenure extension, you lose even more. Don't prepay the loan at the right time, gone another 8 to 10 lakhs. But here's the good news. If you understand how home loan actually work in India, you can beat the system. So today I am simplifying years of home loan confusion into one clear practical video with a lot of examples on topics like which bank is the cheapest, how interest works, how banks scam you, and how to prepay smartly and close your loan faster. By the end of this video, you will understand home loans better than most bankers. Hello everyone, I am Suraj and welcome back to Dio Talks. Okay, section 1. Choosing the right bank means 15 to 20 lakhs saved. Most people lose 15 to 20 lakhs just because they pick the wrong bank for their home loan. Here's the truth nobody tells you. Suppose two banks can give you a 70 lakh loan. Same tenure, similar EMI structure. But one bank can still charge you 18 to 19 lakhs extra over your loan lifetime. You know why? Because even a small difference in interest rate changes everything. Right now, government-owned banks like Bank of India, Bank of Maharashtra, Union Bank, etc. are giving rates starting around 7.4%. Private banks usually 7 to 9%. NBFCs between 10 to 15%. On a 30-year loan of 70 lakhs at 7.35% interest, EMI would be roughly 48,000. And at 8.4% interest rate, assuming you could not get the best rates, EMI would be roughly 53,000. That's over 5,100 extra every month. And over 30 years, that's almost 18.4 lakhs wasted only because you choose the wrong bank. So before taking any home loan, at least visit 5 to 6 banks and write down these 3 things. Number 1, interest rate. Number 2, processing fee. And number 3, any offer basis your CIBIL score. This one smart comparison today can save you lakhs over the next 30 years of your loan. Okay, so why are government banks cheaper? It's simple. They borrow money very cheaply. They have huge funds in savings accounts and they have to pay only 2.5% to their customers. Then their spread, that is profit margin, is lower and their processing fees are tiny, often just 0.12%. So because their own cost of borrowing is low, they can offer cheaper home loan rates. Next question is, why do private banks charge more? Because their borrowing cost and their profit margin is higher. They keep a bigger spread and their processing fees is around 0.3 to 0.4%. And their classic pressure trick, सर इंश्योरेंस ले लो नहीं तो डिस्बर्सल रुक जाएगी. All these extra costs eventually come from your pocket. And last, the NBFCs. Why 10 to 15% interest? Because they don't have savings accounts. So they borrow money at higher interest from other sources and naturally pass that higher cost to you. Section 2. The smartest way to find the cheapest home loan. There is a trick to know the cheapest home loan rates. And trust me, it's very easy. Yes, forget online articles, forget ads. Just do this. Visit every major bank in your area, like SBI, Bank of India, Canara Bank, Union Bank, HDFC, ICICI, Kotak, Axis, etc. And ask just 4 questions. Number 1, what's your current interest rate? That is repo plus spread. Number 2 is, what's the processing fee? Then number 3, check if they force insurance at disbursal. And number 4, check any special offers for your CIBIL bracket. Now here's the trick most people don't know. Rates are negotiable. Yes. If one bank quotes 7.8% and another offers 7.5%, then use one offer against the other and negotiate harder. They will most likely reduce their spread. See, a tiny difference of just 0.3% per annum can save you around 7 to 8 lakhs on your typical loan. So don't pick the bank that costs you the most. Pick the one that cost you the least. So do this comparison exercise once and you will save lakhs over your loan lifetime. Section 3. The real formula behind your home loan interest rate. You know how banks actually decide your home loan interest rate? There's a simple formula. Interest is equal to repo rate plus spread. Repo rate is fixed by RBI and spread is the bank's profit margin. For example, repo rate today is around 5.25%. Suppose HDFC Bank adds 2.25% spread. So your home loan rate becomes 7.5%. In case of Canara Bank, spread is only around 2%. So their loan rate comes to 7.25%. See, banks with high CASA ratio keeps spread low. Banks with expensive deposits keep spreads high. Once you know this formula, you know exactly why some banks are cheaper and why you should compare before you take the loan. One quick request. If you are finding this video helpful so far, please hit the like button and subscribe to the channel. Your support means a lot. Section 4. The floating rate trap that cost you lakhs. When RBI cuts repo rate, why doesn't your EMI fall immediately? Because banks don't want it to. Most home loans in India are on floating rates. They are supposed to move with RBI's repo rate. So when repo rate drops, your EMI should drop or your loan tenure should shrink. But here's the trap most banks use. They keep your EMI the same and increase your tenure. This gives you a smaller EMI burden today, but makes you pay much more interest in the long run. For example, suppose loan is 50 lakhs. Interest 8%, tenure 20 years. Then EMI would be roughly 41,000. and total interest would be 50.4 lakhs. Now if RBI cuts repo rates by 0.3%, so your rate drops to 7.7%. What should happen then? Your EMI amount should drop slightly or your loan tenure should reduce. The bank increases your tenure to 30 years. So your new EMI would be roughly 35,000 and total interest would be 78.3 lakhs. That's around 28 lakhs more interest for the same loan. All of this because your EMI looked comfortable to you. You know why banks do this? Because low EMI means customer feel happy and longer tenure means bank earn more interest. Sadly, it's legal and this is the number one way customers lose lakhs without realizing. So next time interest rates fall, tell your banks clearly, keep my EMI the same or even increase it slightly, but never allow tenure extension. That's how banks make lakhs and crores from you. Section 5. The one hack to close your home loan 5 to 10 years early. Hack number 1. Pay one extra EMI every year. For example, suppose loan is rupees 50 lakhs, tenure 25 years, interest 8%. Then your EMI would be roughly 38,000. If you pay 13 EMIs instead of 12 every year, your 25 years loan ends in around 21 years only. Also, you can save 10 to 11 lakhs in interest. Hack number 2. Increase EMI by 5% every year. This one is powerful. For the same 50 lakhs 25-year loan, if you increase EMI by 5% every year, like matching it to your annual salary hike, then your loan closes in approx 12 years and also interest saved would be approx 30 lakhs. Hack number 3. Even paying rupees 2000 extra per month helps. For the same rupees 50 lakhs loan structure, if you pay rupees 2000 extra per month in EMIs, then your loan finishes in approx 3 years earlier, with a good amount of savings in interest also. You know why these hacks works? Because every prepayment directly hits principal, which reduces future interest. So don't just pay EMIs, attack the principal. Your future self will thank you and your bank will hate you. Section 6. Why your home loan barely reduces in first 5 years? You have been paying EMIs for the last 5 years and think your loan is almost over? Sorry, you have barely made a dent. Yes, EMI भरते जा रहे हो but loan reduce नहीं हो रहा. Here's the truth. Example, suppose rupee 50 lakh loan, interest is 8%, tenure 20 years. Then your EMI would be roughly rupees 41,000. After 5 years, you have paid around 25 lakhs total in EMIs. Guess how much principal reduced? It's barely 6.3 lakhs. Yes, you still owe around 43.7 lakhs in principal. You know why this happens? Because of the reducing balance method. In the early years, interest is charged on full rupees 50 lakhs. So most of your EMIs goes to interest, not principal. Banks get their profits upfront in the first few years. That's why you feel like you are paying, but the loan is not decreasing. Okay, here's a quick checklist on home loan to save rupees 20 to 40 lakhs over your loan lifetime. Number 1 is compare interest rates, that is repo plus spread across 5-6 banks. Number 2 is don't allow tenure extension when RBI changes the repo rate. Number 3, pay one extra EMI every year. Number 4, increase EMI 5% annually. Number 5, avoid private banks insurance pressure. Number 6, choose government banks for lowest cost. Number 7, never pick a lender only because relationship manager is helpful. That's all for now. Thanks a lot for your time and let's take care of this beautiful world. I'll see you in the next video. And smile. Always smile.